What's up, everyone? In today's episode, I'm going to give you my watch list for Monday morning and the game plan for the week ahead. This week will be the last full week for the month of March. Now, March has not been the fantastic big green month I think we were all hoping for. January and February were stronger. In fact, October, November, December were all stronger. We've come up against a little bit of a headwind in the market created by the S&P 500 selling off in response to this sort of trade war that's going on with ratcheting up tariffs, sort of this tit for tat that we're seeing. And then the Federal Reserve did not decrease interest rates in their last meeting. So, we're in a position right now where the market's been a little bit top heavy and it's come back down a bit. And that has definitely weighed on the small cap market. So what I've had to do for the month of March, in order to make sure this is still a green month for me and not a big red month, is dial everything back, reducing share size a bit and reducing the total number of trades I'm taking on any given day. Now, one of the things I know is that when the market is cold, I can trade B and even C quality setups. When the market is hot, I could trade B and C quality setups and I can still make some good money because the overall market is just so hot. There's so much enthusiasm that even lower quality setups can still work well. But when the market gets cold, even A quality setups don't resolve as well. And certainly B and C quality setups, well, they can get you into some trouble. So it's kind of interesting how you have to adjust your quality standard a little bit. Now, of course, you don't have to. You could just always say I'm only trading A quality. But let's just say in a hot market, trading A quality setups for me might yield 80% accuracy. That's pretty solid. Well, but B quality setups might yield 70% accuracy. And C quality setups might yield 60% accuracy. And as long as I've got a positive profit loss ratio, I would be profitable on all of those. So why not cast the net wider, take more trades, and make more money? That is the right thing to do. However, when it cools off, you got to kind of all of a sudden dial it back down and slow down, because what you'll find is your accuracy just goes down across the board. A quality, B quality, C quality, the accuracy just goes down entirely. Now, to better understand how I quantify A, B, and C quality, you need to understand my 5 criteria for stock selection. I will put a link in the top of the comments and in the description where you can download those 5 criteria as a PDF. You can print it out, you can have it and use it in your own trading. So if a stock meets all 5 criteria, it's A quality. If it meets 4 out of the 5, it's B quality. If it meets 3 out of the 5, then it's C quality. That's generally how I consider or how I grade a stock being A, B, or C quality. Now, there are a couple of variables where a stock could technically meet all 5 criteria of stock selection. However, there may be something about it that we know just historically, like this is a stock that tends to be really difficult. Or maybe, for instance, the stock is easy to borrow, which is sort of a little bit more nuanced. Things like that can kind of adjust the grading, but just as a general rule of thumb, meeting all 5 criteria will generally make a stock an A quality setup. So in fact, if we look at the stocks from Friday, so SGLY, this is a stock that went up 144%. Well, it closed up 144% on Friday. It went up even higher than that, all the way to $2. And the only problem with this stock for me was that it was a little too cheap. I don't usually make good money trading stocks under $2. So this at best would have been a B quality setup just because of the price. That's the only reason, but the price is a little cheaper. Doesn't mean it doesn't move, doesn't mean it doesn't have potential, but it's B quality for me due to the price. IBO, this is a stock that was an A quality stock, had A quality potential. However, it didn't give me an entry. And so I didn't take any trades on it. So unfortunately, when I sat down on Friday morning, it was already selling off. And although it popped at the open and ended up squeezing a little later in the morning, I was off doing other things. In fact, on Friday, I had a book signing in New Orleans. So it was great to meet so many of you guys who came out for that book signing. If you haven't already picked up a copy of How to Day Trade the Plain Truth, it's a bestseller on Amazon. You can check that out. And people that are on our newsletter, we email you the dates and times of those book signings. So if you missed the last one, well, maybe I'll catch you at the next one. So anyways, I had to run out on Friday for the book signing, so I didn't take any trades on IBO, but this was an A quality stock. It just unfortunately didn't give us, for me, or at least a clean entry. Then we had ALUR. This one, this was also an A quality stock. I traded it, made money on it. It wasn't the very easiest to trade, and that was because on this one, the news had begun after hours. Now, having news is what's important, but typically I do better when the news starts pre-market. But having news within the last 24 hours is just sort of the requirement. And when we do sometimes see news starts after hours and then you get a really nice move pre-market. But what sometimes happens is traders will load up after hours, hoping for a big gap up, and then pre-market the next day, they're selling. So, when you start trading it here, you're not one of the first people to have seen the news. So you're kind of joining the party a little bit late. All right, so make sure you check out the 5 criteria of stock selection. Now, when it comes to my watch list for tomorrow, I want to start high level by looking at a couple of stocks that have made big moves and also taking a look at the after hours top gainer scanner and the continuation scan. So the after hours top gainer scanner on Friday shows us stocks that squeezed after the closing bell. Now, TCBP was the biggest move. Oops, I got to link my charts. And this one was only 34%. So it's not a big enough gap for me to be interested. And the stock is at 67 cents, too cheap. So this one is no go. WINT up 14% after the close. That's not enough to get me interested. It's also too cheap. RGC up 10% after the close. Now, this is a little crazy. Okay, so RGC is also on our continuation scan down here. It's up over 1,000% in the last 2 weeks. It's kind of unreal. This stock keeps going higher. However, there is something to be concerned about. So let me see if you can pick it up. What would be the reason to be cautious? Certainly one reason is that it's a Chinese company. But you wouldn't know that just from looking at it here. The thing that makes me nervous, declining volume as the price is going higher. So that's a divergence. Now, you would expect that to a certain extent because as the price goes higher, buying 1,000 shares when it was down at $5 costs, $5,000. Buying 1,000 shares when it's at 50 costs $50,000. So you would expect volume to decrease a bit as it goes higher, just based on the price being more expensive. But this has really decreased quite a lot. And unfortunately, the result is that the stock now experiences really large spreads between the bid and the offer. And you have really big swings that are really just about unmanageable. So this right here is 2 minutes where it went from $63 down to $55, right? So like $8 a share drop in 2 minutes. Even with 1,000 shares, that's $8,000. So what some people like about this is that with even relatively small size, you could make some decent money, size being share size, because of the rate of change. But it's a stock that you can't just jump in and jump out because there's not enough liquidity. So it's got a lot of risk. And the fact that it's now also a Chinese company located in Hong Kong, this is going to give us reason to be cautious. So we've seen, of course, this history of these Chinese companies making these big moves, and then in one day, liquidation, and it just completely sells off. So we could look at this. I haven't looked super closely at this one. So let's just see. Oops, let's do find. I like to check to see who the underwriter is, and we can see if we could find it in this. Maxim Group. Okay, so Maxim Group LLC. So now what I do is I go into screening, I search all documents, and I look for other companies that have the same underwriter. Oops, just like that. And then I just kind of look at their charts. So I'll put this on the second monitor up here. So they were the underwriter for, let's see, JTAI. So how's the chart on JTAI look? Well, and we have to recognize RGC, has been around for, about 3 years, 4 years. So it's been around for a while. It's not a brand new company. It already has a history of having big pops and drops. But if we look at some of the other companies that underwriter's involved with, JTAI, that's a stock with a long history of selling off, right? So that's not super impressive. What's another one? EDBL. This one's been selling off for a long time. It's a U.S. company, though. Let's see, SYTA. This one is a Canadian company. Wow, 4 reverse splits within like a year and a half. So, you don't love seeing that. Sometimes when I see something like that, I'll just kind of look a little bit more closely at it and see whether or not there is a relationship in China. But let's see. So fleets of all sizes. Yeah. So, All right. Then a couple others they've been involved with, RSLS. Look at that chart. So this helps me kind of gauge, like, look, if you were going to, if there was a new company and you found out that it was backed by Elon Musk, I mean, controversial as he is right now, his history of producing profitable companies is pretty well established. So if not, they're volatile, but still there's a lot of room for volatility. And we do like that as active traders. So if he was bringing a new company on the market, people would be pretty hyped about it. So when this Maxim Group LLC brings a new company on the market, well, unfortunately, I have to think that people are going to be a little bit more cautious about it because of the history of some of the other companies they've brought. So I feel, personally, like RGC just carries the risk that in one day it could have a really big sell-off if maybe insiders associated with a company decide to sell. So for right now, even though it's up a lot and that's tempting, it doesn't make a lot of sense to me to try to take the risk of trading it. HKD, this of course is a stock that IPO'd and went from about $16 a share up to $2,500 a share. So, is RGC going to be the next RKD? It could be. I mean, it's unlikely. This was the only time we've seen a stock go up that high. ZJYL, though, has done, also a pretty impressive move. So some of these Chinese stocks can be pretty insane, right? They can do some pretty crazy things. From $1 here to 26. This had an after hours high, though, of, gosh, it was even higher than that. It was like $150. So I understand some of you guys have been asking questions, RGC, why aren't you trading it? And for me, I just don't feel like I can manage my risk, primarily because of the price. So as we think back about our 5 criteria of stock selection, this currently has no fresh news. It's priced well above $20. So those 2 issues alone make it so it only meet 3 of my criteria. Well, actually, it's not going to have high relative volume, and it's probably not going to be up. So actually, this might not meet any criteria except that it has a lower float right now, because the relative volume is actually pretty low, and the total rate of change is pretty low as well. It's not obvious. So RGC, they can't work with that. Now, CRVO, I saw some of you guys trading this on Friday. CRVO is also kind of interesting because you've got this, daily kind of moving higher, and some might look at it and think it looks sort of similar to RGC. So let's take a look at CRVO. So CRVO daily chart on this. How long has this company been around? It's been around for a while. It's not a brand new company. It does have a history of doing splits. Of course, many small caps do. But this is a company that's been around for, we've got chart history on this going back to 2014, full 10 years, and it goes back even further than that. So, all right. They're not just a fly-by-night kind of out-of-nowhere company. It's not a Chinese company. It's a U.S. company. Now, we could look in more detail about, to learn more about the company. Med, so let's see. CEO, John Alam, biotech company, So, that fits within the theme of what typically works well for us. So the only issue for me with this, I'm not worried about, a China kind of, where a 70% drop in one day type of thing. However, this is a company that has been up quite a lot. And unfortunately, at this point, early in the move, you can get some good continuation. But as it goes higher, volume declines. Traders get less interested in it. The stock isn't as obvious. And usually, you don't end up getting really good price action. So unfortunately, I don't think that's going to work either. Now, IBO, on the other hand, that's only on day 3. So CRVO is on day 8. It just keeps going higher. IBO, that's only on day 3. So you could have swing traders who are shorting this and looking for a drop back down 50%. Stock goes up 700%. Maybe look for a retracement, right? So you may have some people that are swing trading this to short side, and each time it pops up, they're adding and adding. And they're waiting for it to break down. But if it fails to break down and eventually makes new highs, where's the capitulation point? Where's the point where shorts give up? Now, this is a stock that is blue sky, all-time highs, relatively low float. It's above ascending resistance here. It's got more room on the daily. So I would say if, and it's an if this could break through the highs from the previous day, what do we look at? Well, we've got ascending resistance up here. I've got to adjust this trend line. If you press the shift button or the control button, you can snap to the top of a candle. So that means here we would have potential resistance up around like 750. Now that's not a whole lot higher than yesterday's high, Friday's high. And typically trading it in this area or this area is not going to be very easy because the volume's going to be lighter. Volume really only picks up if you actually break through the previous day's high. So unfortunately, that wouldn't happen until $6-ish. We're down at 4 right now. So if it goes up to 6, then also by that time, it's a little extended. So it's kind of a no-win scenario, most likely on this, short of the company putting out fresh news that sends the stock straight up. So probably not going to get another trade on IBO. ALUR from Friday. This one closed Friday as a red candle, which is a win for shorts because it looks weak on the daily. But in all things considered, it still was gapping up and held up pretty well. So the gap on this one was from, let's see there, we still closed up 57%. We peaked at about 80%, which is good, but not, insane. So I don't think ALUR is going to give us more action, again, unless the company gives us some more news, which is possible, but I'm not going to expect that. VVPR for me is a little too cheap. RNAS, this one's been popping up for a few days here and there. It's a little too cheap as well. XHLD also too cheap for me. So I don't have anything. RGC is a no. CRVO is a no. IBO is a maybe. So IBO goes on a side chart as being a possibility. And that's really the only continuation setup. And it's a maybe. But it does have, 2 high volume green days on the daily. And that is good to see. Volume was higher on Friday than on Thursday. But that's because most of the move happened on Thursday after hours. But it's still fine. It's good to see that. Nice profile. Maybe a day or two, Monday or Tuesday, pulling back. And then we get a move on like Wednesday or Thursday. That could work really well. Because by that point, we won't have to worry about this being close by. And the first daily candle to make a new high can get a lot more volume than sort of day 3 of continuation when it's already pretty extended. So after here, if you get 2 days of pullback, shorts will cover most likely. And then you'll have a fresh group of long bias traders coming in here for that next leg higher on day 4 or 5 after the pullback. So IBO, we'll keep that on watch this week. So my plan tomorrow, my game plan, and I guess I would say my watch list for tomorrow is going to be this scanner right here. Now, I can't give you what's going to be on that scanner because I don't know what's going to have news yet tomorrow. But when I sit down, first thing I'm going to check tomorrow morning is this scan right here. And I'll be looking at the top, 3 or 4 stocks on the scan. First, I'll be asking, am I already familiar with it? Is it, IBO or a stock we've been looking at and talking about already? Or are there 4 brand new stocks on the scanner? What are the floats? What's the volume? What's the price? So check price, volume, float. What's the relative volume? And then look for the flame. What's the news headline? And how recent is it? If it's no news, if it's Chinese, I'm going to have to approach it with a little more caution. But we've had some big moves on Chinese stocks with no news, so I'm not opposed to trading them. I just have to cut my risk quickly or cut my losses quickly. I think that's one of the biggest things that you need to learn as a trader is to cut your losses quickly, to be fast. You've got to be ruthless. You can't just hold and hope. Some people might get away with doing that with large caps, but certainly holding and hoping something like Tesla that drops 50% in a matter of weeks, not a great strategy. Holding and hoping doesn't work, but it really doesn't work on small caps. These small cap stocks, they can get beaten up. They can do reverse splits. They don't pay dividends. There's no reward in owning it unless you're buying it and selling it at a higher value. So that's a big difference between owning shares of a company like Apple or, IBM or Microsoft or Walmart or Pepsi. You own a big, large cap company, even if you're down in the position, they're paying you dividends. So it's like softens the blow a little bit. You keep collecting your dividends. Eventually, hopefully the company rallies back up. I mean, these companies can, go through extended periods and even go into bankruptcy, as we've seen with some of the big airlines. But that doesn't happen as often. However, the downside you might say with Ross, why don't you just day trade large caps then? They're a little bit safer in that regard. And while it's true that they're a little safer and that they don't usually go to zero, they're also a little bit more difficult to day trade. And that's because they are more high frequency trading algorithms competing to make the market on them because there are institutional traders buying and selling those stocks all day long to balance their portfolios and just to buy and sell for clients. And so the result is high frequency trading algorithms dominate the price action on large caps, and it makes it very hard to read the level 2 and to read the time and sales, which is for me one of the tools that I use to read price action. Looking at the stock chart gives me historical context. I see a pattern, and then I use the level 2 to help me decide if I should buy. So when I see a pattern on something like Pepsi or IBM or Walmart, how do I know that pattern is not just by coincidence of some algorithms that bought and then a couple that sold? How do I know that pattern is actually being watched by other retail traders? And the fact is, you kind of have to assume it's not being watched by other traders. And that as soon as you buy, there's a high frequency trading algorithm that is there to absorb your shares, to take them for themselves, and then to turn around and sell a stock. So it's just very difficult. And although there are investors with large accounts that can do well trading large caps, most retail traders don't find themselves doing well. It's like playing chess against the computer. So all that was to say, if you're trading small caps, you've got to be ruthless about cutting your losses. If it's not working, I get out of the trade. That's one thing you'll notice. I never hold stocks overnight. I don't turn day trades into swing trades. I've got a lot of discipline in that one critical area where it really matters. So tomorrow morning, we're going to be watching the stocks that are on the scans. I'm going to be looking for stocks that meet all 5 criteria of stock selection. And ideally, we'll have something on the scan price between like $4 and $8, kind of that sweet spot where I can jump in 5, 10,000 shares, pull 40, 50 cents out, up $4,000 or $5,000 on the first couple trades, then lean in, scale up a little bit, and make my way up towards 15, 20,000, on the day. That's, of course, my aggressive daily goal is 20,000. But if we look back at the month of March, what we can see so far is that for the month of March, I think I've only had 1 or maybe 2 days where I was above 20,000. So let's see, 21,000 there on March 4th, and that's the only day. So I'm sitting at $136,000 on the month of March right now. I've had to dial it back. I've had to reduce the total number of trades I'm taking each day, 10, 11, 17, 15, whatever. Fewer trades, being a little bit more conservative, but focusing on consistency and staying green. Showing up every day, Q1, and staying green. So I want to try to keep that going for the last 6 days of the month of March. We've got this week and then one day, Monday the 31st, and see if I can lock up 6 more green days. And if they're small green days, I can live with that. I'm focusing on being the most consistent trader, if not the most profitable, one of the most consistent. Now, no doubt there'll be people who make more money than me, and there's probably people that'll have higher accuracy than me, I suppose. There's no question about that. My accuracy at 70% or whatever it is not the highest, but consistent at least in showing up every single day, and more often than not, walking away in the green. And I'm doing a pretty good job with that, and it's because of the strategies I developed last summer in regards to how to scale in to each day, starting with smaller size, scaling in, and then scaling down at a certain time of day before I get too close to my kind of end of the day. So anyways, that's it for me. I hope you guys enjoyed this game plan for the week ahead and my watch list for Monday morning. I hope you download my 5 criteria for stock selection, and I will start my live broadcast at 7 a.m. tomorrow for members at Warrior Trading. So I'll see you guys bright and early in the chat room. All right, that's it for me. I'll see you guys tomorrow. Reminder as always, trading is risky. My results aren't typical, so please manage your risk, take it slow, and I'll see you guys in the morning.